Well, good evening, ladies and gentlemen, and thank you for being with me today. Pleasure to have your company as always, and it's good morning to the east coast of Australia. Good afternoon to our friends across the Tasman, the land of the long white cloud, the very beautiful land of the long white cloud, I should say. Okay, great to have you all here. Who have we got? Let's have a look. Okay, we've got Azina. Azina, welcome. Nice to have you with us. Folks, how's the volume? Can you hear me all right? Would somebody just type in the question box and let me know that you can hear me all right? Halfway around the world or more? Yes? No one yet? Hello? Hello? Okay. Are we having trouble with volume? Here we are. Yep. Markets are rational, orderly, and sometimes predictable. Very nice. Let's move on and see about that. So, what was the proposition for today? The one sure thing. So, remember always that trading is a game of probabilities, like most things in life. And sometimes those probabilities can get very high, but it is still based on probabilities. And here we are back now, Mark, sorry. We have to recognize that no matter how much we twist the screw, there will always be events that appear to us to be random. Of course, they're not random. Very, very little is actually random, truly random. Most of it is something that we didn't think of, and we'll declare it to be random, but that's not right. So the first part of the proposition is all markets turn at the Danielcode numbers, and that's probably a high 80% statement. If we just turn that slightly and say markets will not turn without Danielcode target recognition, now you're into the mid 90%. It's extraordinary. It's there. We've been doing this, as you know, some of you, since 2007. And how people can trade without these Danielcode numbers is amazing to me. I am constantly staggered by it. And it is just so beautiful. I mean, you know, we're a very, very small business. We don't advertise, and you've got to find us to get here. But no one's more amazed at how Danielcode controls these markets. No one's more amazed than me. Today, with some really, really big moves, lots of drama in currencies and Forex today. These really big moves, typically volatility just destroys support and resistance levels. in other methods of finding those support and resistance. The Danielcode's different. In fact, it's totally the opposite. The greater the volatility, the more accurate it is. And you'll see today with some of these massive bars in Forex just how accurate it is. And if you're not a Forex trader, pay attention to what happens in Forex anyway, because all markets work exactly the same. If you see it happening in Forex, it can happen in futures and vice versa. I know the Forex guys like to go to a lot of trouble to try and distinguish themselves as something separate. They like to call ticks, they call them pips, and there's no reason to do that, really. It's just an attempt to distinguish it and to highlight their view that Forex is different to futures. And it may be on other programs, but on the Danielcode, they both work exactly the same. There is just no difference between how they respond to the DC numbers in Forex or futures or currencies or what have you. All markets work the same with the Danielcode. So what is the one sure thing? The sure thing is that markets will not turn without Danielcode target recognition. And I'm going to show you that today. And I'm going to take you through pretty much all of the markets that we cover with the members' charts to show you what target recognition looks like, the various forms that target recognition can take. And there's some really interesting moves today because big volatility, gets the adrenaline up and starts the heart pumping a little bit faster, which is a wonderful thing. So let's just get started on that. Now, before we get into it, what I'm showing you here is the fourth seal. This is our forecasting, long-term forecasting program that's run by Frank DB. He's a Belgian gentleman, a young gentleman, and he came to a tutorial, Danielcode tutorial, in when we had it in Taupo, New Zealand, right by the Great Lake there, beautiful, back in 2011. And he introduced himself to me and he said, I've never seen a financial chart, a market chart. I don't read financial articles. I know nothing about it, but I like your articles. I used to write articles for Financial Sense mainly back in those days. And he said, I'd like you to teach me. Well, he's gone from knowing nothing to being a real expert. And he runs this fourth seal commentary for us. And have a look at this. I mean, this guy is gutsy as hell. I can tell you that a month or so ago, his idea that January 2022 was not the top, that it did not comply with the various time cycles that he was, you can see some of them are marked on this chart here, the 44 cycles. It did not top at one of the cycles that he recognized. So he declared then, that's not the top, there's going to be another top, a higher top. And it doesn't look so silly this week, does it? So get your head around that. I know that some of you are with us here today, got stuck into trying to position with a heavy options load when we thought, well, Frank thought we had the high, and naturally that was disappointing. But he's sticking to his guns, and he's saying that we can get a new high in August, which will be the final high. And if that's so, remember that on the 25-day charts, all charts, in fact, these time cycles are accurate to plus or minus one period. And the reason for that is because we have 104 days. The bars are simply not on your chart because they're weekends. And we have another 10, 11, it might even be 12 market holidays. Now, Juneteenth is the new one, which is on Monday coming up. So that's sort of over 27% of bars that are missing. So roughly you can say, it's about a third, a bit less than a third of the bars are missing. So how does this time cycles manage to be so accurate? Because although we say they're accurate to plus or minus one period, the vast majority of them happen absolutely on the bar where they're expected. And it is extraordinary. And those of you who are interested in time cycles, go back through some of our recent webinars. They're all posted at the Danielcode website. And have a look at how time cycles absolutely control markets. It's amazing stuff. Okay, so there we are. Frank is saying that new high, all-time high, mid-August. Now, remember, plus or minus one period. That could be July or it could be September. But get yourself subscribed to the Fourth Seal if you're not already, and you'll be able to see Frank's commentary and charts, which come out every week. Excuse me. Now, let's move on. This is the S&P. For anyone who's trading this without the Danielcode, you are heroic. How you do it, I do not know. Just have a look at that and think how you're going to trade it. Why do we have those movements in this chart? Can you foresee them at all? Are they predictable? And the answer, of course, is most of the time, yes. So take a look at this. Let's just start. This is our front month now. This is the September contract, now the front month. And let's move on. This is the same chart. What we've done is we've made some linkages between all the little dots you see at the beginning when there was so little volume that there were hardly any daily bars. They were just dots for the closing price. But as I've shown you in previous webinars, those dot patterns are extremely accurate. And they've created these blue lines that you see, which are extensions of the range. When you look at Danielcode charts, you'll see red and black lines. They are retracements of the range, and you'll see the blue lines, which are extensions of the range. And you can see that some of these bars have found really good, tight target recognition of the blue lines. To get target recognition, you need to have the bar high-low or the close at or less than 0.1%, not 1%, 0.1%. So here, 1% is 4 points. 429 is 10%, 42 is 1%, 4.2 is 0.1%. But in fact, 4.2 would give you 16 ticks within that range. The reality is we keep getting target recognition within 4 or 5 ticks, a handful of ticks, that's it. And you can see some of those. And where we have some of those, we get validation of the blue lines. Then we can start to put time cycles on them. And this tool here shows 44, 59, 62, and 70. They're the most common time cycles. They're not the only time cycles that we use, but they're the most dominant time cycles. And they also work the same way on price. 44%, 59%, 62.5% are price cycles. In fact, they're time cycles. We simply put them on the chart horizontally, and they work as time, and they work exceedingly accurately as time. So you can see here now we've started to create some time cycles, gave us the forecast highs. That's all happened. Now I've added a few more. You can see that we're starting to see the highs and the lows of this move. And here's what you finish up with, that you can find pretty much every high and every low without too much work, because the market's doing the work. It's the market that's going to the numbers and saying, this is target recognition. Once you have that, then you can have a high level of confidence that it will support time cycles starting from that bar. And these are daily bars, as you can see. So pretty straightforward once you know the Danielcode. Well, more straightforward than anything else in the world, but how people manage to trade without Danielcode is beyond me. as I say, they're heroic. Here we are. This is the Aussie USD. We're going to look at quite a few Forex markets today, just for the same reason. Just take my word for it that they work exactly the same as does the futures charts. So this is the Aussie USD Forex pair. Same question. How do you trade this? I mean, if you don't have Danielcode, you've just got a naked chart there. It's horrible. I don't know where you'd begin to even think you could trade it. Boy, I'm so sorry about all of that. This is a chart I showed you at our last webinar, which was 2 weeks ago, a fortnight ago. Greg from Colorado and Texas, if you're with us today. A fortnight is a very common Australian expression, and it means 14 nights, short for 14 nights or 2 weeks. So a fortnight is 2 weeks. Apparently, no one in America has ever heard that expression, so I use it occasionally. Now you know what it means. But I showed you this chart 2 weeks ago, and what we had in was the low turn where I've got TO3 and blue line buy signal. Look what it's done now, and it's gone a fair bit further this morning as well, straight up, a big bar up today, which is quite wonderful. And I can very quickly tell you what that trade is worth so far, because we know what we got long. And we know where today's close was, about $3,500, a little bit less than that today. Marvelous trading, straight up. And you can see around that cluster around the bottom where we've got the DC support number at 6501. Then I'm showing you the close of that bottom bar was 6504. That's 3 ticks variance. That's all. Nothing. It's like less than a human hair. And that created a TO3 and a blue line buy signal. And you can see as it ran up here, periodically it's giving us target recognition. And it just keeps on doing it and doing it and doing it. So we had 2 lots of target recognition back at about, don't worry about the about, I'll tell you, it was June the 2nd. And as well June the 6th, and then June the 13th had a high of 68.07 against the blue line, which you can't see it on this one. It's on the members charts. Well, this one's got it at 68.03. The members chart's got it at 68.04. The next day was Wednesday, and the high of that bar, 68.36 against the blue line, 68.31, 5 ticks variance. And when that sort of thing is happening, which it happens all the time, the market is saying to you, I know these numbers and I'm tracking them. And in fact, we expect that we'll get that target recognition typically once within every 2 or 3 bars. If we go longer than 3 bars without target recognition, that's the market's way of saying to us, not this ratio, try a different ratio. But 95% of the time, it'll be on the dominant ratios. And it looks like it's all very complex, but the reality is markets have about 4 or 5 patterns, and they keep doing the same thing again and again and again. Doesn't matter whether it's Forex, doesn't matter whether it's a stocks portfolio, doesn't matter whether it's futures, doesn't matter even if it's crypto. All markets do the same thing. They've got that little narrow area that they choose from, and that's what they do. So have a look at today's bar. Massive big bar. Now, folks, bear in mind, if you would, that I'm in the other half of the world, most of you, and your trading day is my night. So for these webinars, I start putting the final details to them at about 4 o'clock in the morning, my time, which is 2 p.m. New York time. So these charts that you can see in the webinar were taken at about 2 o'clock today. So they're not entirely accurate, but you can look at your own charts to verify all of this. that you had the Aussie US dollar pair finish the day with a high of 68.93. You can see the blue line sitting there at 68.92. This one's got a slightly different one. Okay, look at the members charts for that, and we'll see what else we can find that was of interest. So I've just blown that all up for you now so you can get a closer look at it. And it doesn't go high enough to show, yes it does, to show you what we wanted. There's a blue line at 68.92 on members charts, which is not appearing right there. That's on a different computer, but I can very quickly show you that. Take my word for it for the time being, folks. You can go and have a look at members charts in your own time, and they're going to be updated later today. I'm aware that a lot of those big Forex moves, some of them have run off the available charts that are sitting there for you, so I'll be updating almost all of those sometime today. All right, so there was all of that. Now, this is just to remind you where this all started, this massive, great big trade. This is the members chart from May the 31st, and you can see 64.59 is the blue line there. The actual low of that bar was 64.58, one tick variance. That's how accurate this stuff is. Does that happen all the time? Pretty much, very often, and never, if it's greater than 0.1%, then it's not target recognition. So you can see how perfectly that target recognition was to get that close. And here you can see that 68.92 I've been waffling about now. You can see where this big bar went up, and today's high for this particular Forex pair was 68.93. You can see the blue line, 68.92. That's perfect target recognition, as it was yesterday, as it was the day before. This market is saying to you, I know these numbers and I'm tracking them. Scary stuff, isn't it? But that's the truth. That's what markets are doing. Markets have always done that. Problem has been that until we had the Danielcode, we didn't have the language to understand what the market was trying to say to you. But most of you have the view that markets are your enemy or your challenge. They're not. Markets are there. They're created specifically to enhance your life, to enrich you, and to make you prosperous and even happier than you are. And once you start using Danielcode ratios, you'll see that. How often does this happen? All the time. All the time. And if we don't get target recognition within 3 days, that's telling us we're using the wrong ratios, and we can soon add the alternate ones. But the reality is better than 90-something or percent. Take your pick on that. The major ratios, the markets just cling to them. I mean, this was a big, high volatility move today. And there it was. Its high came in within one tick of the blue line. This market is saying to us, I know these numbers and I'm tracking them. Pretty wonderful stuff, isn't it? This is the Euro USD dollar, and this was the setup for the equally big move that we had in the Euro. And you can see what's happened since then. There it is. We had a TO3 buy signal at the low. Up it went. We had target recognition at 106.399. And that particular low was 106.889. We had target recognition of the bar before it as well. Up it went, a little bit of a swivel around, and then whoosh. Okay, look what it's been doing. This is DC target recognition. I've got it on the chart for you. This is DC target recognition. That second close with it on at the close is 108.324. What's our number there? 108.289. What about today with a really high volume move that's just roared straight through 1, 2, 3, 4 5 Danielcode ratios. This high came in at 109,526. Where's our blue line? 109,506. Amazing, isn't it? And it's even tried to close on it. Better still. Okay, add to your bundle of troubles. British pound US dollar, the cable as it's called. No target recognition at the close. It's gone through all of the blue lines. But before that, the 4 days previous, we've had target recognition, then an outside bar, then target recognition, and yesterday, almost perfect target recognition with the close. Remember, it's at the bar high low or the close. The close is valid at 108,324. 108,324. Where's our number one? I'm even looking at the right chart here. Will help immensely if I get on the right chart, guys. GBP USD, of course. Here we are. Cable. That number 108. 12612 against 2616. 4 ticks variance against the blue line. Great help when you're on the right number. And yesterday's high 12699 against the blue line 12698. 1 tick variance. This market is saying, I know these numbers and I'm tracking them. Today it's just blown through about 6 or 7 levels of Danielcode resistance. It is support and resistance, but not in the way you're used to it. This is so accurate that it's telling us when it's a valid target seeker and when it has achieved target recognition. And remember our statement, markets will not turn without target recognition. Sometimes target recognition often lasts for 2 bars, sometimes even 3. And you don't have to take my word for this. We've been doing this for a long time. And if you go to the Danielcode website and click on the link that says Chart Archives, you'll see in there over 40,000 members' charts that I've created for members since late 2007 when the website first went public. Every chart I've created since then is in those archives. And as I say, over 40,000 of them. Look for yourself. Judge for yourself. Make your own decision. I don't think you'll ever find any other program that is as robust, as transparent, as open, and as clear as Danielcode. Right, here we are. We're still traveling. This is the New Zealand US dollar. It's kind of interesting because Australia is New Zealand's largest trade partner by a long, long way. So the Kiwi, as it's called, Kiwi is a flightless bird. That's New Zealand's mascot. But the Kiwi has to stay within a pretty set range to the Australian dollar because of the massive trading arrangements there are between Australia and New Zealand. Look at this high today. This high came in at 62.43. Where's the blue line? 62.43. Perfect. 0 variance at target. What about the previous day? What about yesterday? Close of that bar is at 62.07. Where's the blue line? 62.08. 1 tick variance. The market is saying to you, I know these numbers and I'm tracking them. And you should be able to, once you get used to looking at these different price levels, you should be able to see the progress of how these markets move. Now, if you don't like numbers, don't get frightened because I do it all for you. I create these numbers and put them on the charts twice a week, sometimes more often if we get a big burst of volatility like today. A lot of these charts will have to be updated today. So sometimes there have been occasions when I've been doing them every day for what seemed like a long period of time. But there, look at that. You can't look at this level of accuracy and say this is happenstance. And let me tell you, it's really hard for markets to find target recognition. They've got to be at the high or the close within that 0.1% or less range, and it's really hard because nobody else knows about these things. These are not Fibonacci numbers. These are not old highs or old lows. These are not levels that appear on any other trading program in the world. These are totally proprietary numbers from the Danielcode. And that means that to find target recognition, the market's doing it on its own against the weight of everyone else's expectations. So don't kid yourself. It's hard for markets to do this, but they do it, and they've always done it. I think I saw someone many years ago, I tested the Dow Jones back to 1924. No different, nothing's changed. Markets have always done just what you're seeing now, but folks are just not aware of that, and I guess that's their privilege. Trade in ignorance, but don't expect good results. Change the Danielcode, you'll get it. Have a look at this. This is the loonie US dollar CAD, Canadian dollar. Huge big bar down today. Look where it went, a nasty little rally up, just enough to get everyone long. But if you were following Danielcode, you knew that if you got an outside bar on the day of a new entry, you must stop and reverse. So we got a little rally up this morning. Just went up to 133.55, and why did it do that? Well, the red line's at 133.54. One tick variance at the high, then a swooping dive down. Where's the low today? 132.10. 132.10. Where's the blue line today, guys? Look at the chart on the right. 132.10. Exactly. Zero variance again. Just goes on, happening all the time. And this can't be happenstance. The probabilities are so far against it all. This is Euro-Yen, same sort of thing, almost exactly. We've got today's high was target recognition at the high, of course, 153.685. Where's our blue line? 153.699. How's that? 14 ticks variance. Beautiful, perfect, amazing. Big value. Previous day, yesterday, had target recognition. Okay, because we have target recognition doesn't mean we will get a close, we'll get a turn the next day. But if we put it in the other sense, that markets won't turn without target recognition, that, as I say, is in the high 90s, and pretty fantastic stuff. So if you are interested in this stuff that we do at these webinars every 2 weeks for you, and you'd like to learn to do it for yourself, I'm happy to teach you. You can go to the Danielcode website, and there's a banner on the front page, Learn to Trade. You can read all about that, how we teach trading price signals and creating and trading time signals, which is the big banger. And you should most welcome to email me, jneedham@thedanielcode.com. Any questions? If you'd like to have a chat on the phone, I'm happy to give you a call. And make yourself part of the elite trainers. By elite, I mean like top 1%. We have got some wonderfully good traders. Okay, this is down a little side street. You're familiar with this. I show you these two charts often. This is gold and the US dollar index, showing how they are inversely correlated. In other words, dollar down, gold goes up. Dollar up, gold goes down. And that is still working pretty nicely, but it's a bit interesting that the dollar has weakened off pretty substantially in the last 8 or 10 days. Not so much as that is apparent in gold. And I think we will be able to show you an explanation for that as we move through the various charts. And this is one that surprised me. Quick look at that and you think it's what you just saw. It's not. This is the S&P in the top pane and the US dollar index below. And you can see how this S&P is moving largely the same way. In fact, it's leading the dollar index, but we've got this inverse correlation with the US dollar index down, up goes the S&P. Really interesting stuff. Okay, back to the working party. Here we are. This is oil, and you can see what it did here. It had a low, the important low. The red line was at 66.69. The actual low was 66.80, about 12 ticks variance, like nothing. And that's why you got a rally today. But even with today's rally, look where the high came in. If you wanted to know, all you options guys or people who know options guys, if you had high probability targets for your high or low of the daily bar, remember there's been this huge interest in 0 days to expiry options. Really short-term option stuff. And on some days, that is now measuring almost 50% of the total options volume in the whole market, which is an incredible thing to think about. But for all of you myriad options traders, if you had an idea of the high probability targets, you wouldn't be following the herd and getting creamed with them. And there you are. What happened today? Where was today's high? 70.96. Where's the red line? 70.93. More interesting than any of that, have a look at the big gap up on Monday of last week, Monday, June the 5th. Big gap up. Look where it opens. This is a massive gap. Even for this market, that's a big gap. And that was caused by an announcement by the Saudis. They were going to cut down, reduce pumping by $1 billion, a billion barrels, I should say. But look where it opened. That huge gap up, the open is at 75.03, and the high went up not much, 75.06. Look where those red lines are, 75.10. That's where it opened, almost exactly 4 ticks away. This strange? No, it happens all the time. It's just that the world doesn't know it. Here's the S&P for today. It's had 2 previous bars leading into today's massive bar, which did not itself find target recognition. The high today was 44.8550 against 44.8150. Bit too much. It's not really target recognition, but we did have target recognition yesterday, and we did have target recognition the day before. So you can see from yesterday's bar, the arrows got in the way a little bit, but the close of yesterday's bar was 44.2475 and 44.24, and there's your red line sitting, or your blue line rather, sitting there, 44.22. 2 points variance, 8 ticks. Amazing, isn't it? Okay. And here we are as we go to gold. This is what I want to show you about gold. Now, gold has been in a consolidation for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days. And if you have a look at your rectangle tool, if you can put a rectangle on the pattern, that's telling you that's a very high probability it's in a consolidation. And when markets are in a consolidation, it's not simply that the ranges don't go outside that group that is consolidating. It's how the market behaves. And what it does typically, it breaks to a new high, then reverses and closes back in the range. Then it'll break to a new low and reverse and close in the range. It's never giving you a profitable close for the last 10 days at least. 1, 2, 3, 4, 5, 6, 7, 8, 9. Last 10 days, there's not a profitable close anywhere in that trading. So it's ripe for a breakout. Remember what a breakout is. It's not what you think. It's not the bar like we had today that just pokes outside the range. It actually has to close outside the range, either above or below. You need a close outside the range to give you confirmation that you have a breakout of what's going on in there. Here is a nice big trade in copper today. Same thing. Yesterday was target recognition. The high of that bar. I'm just hoping you can all start learning all the various ways you can get target recognition. After a while, you'll just do it by eye. I promise you. You just got to train yourself. The high was 387.40 yesterday. Where's our blue line? 387.20. This thing moves in 0.05. So that's like 4 ticks. That's it. Amazing, isn't it? Okay. Soybeans. We're in a super trade in soybeans. In fact, 6S today closed with soybeans at plus $6,200, S&P plus $5,900, natural gas plus $2,300, and wheat plus $1,100. Fair bit of money there. Very nice. I hope you're getting it. Anyway, look at this. Soybeans today, perfect target recognition 2 days ago, and perfect target recognition the day before that. How can this go market? You know, I say at the beginning of these things, markets are rational, orderly, and sometimes predictable. This is the predictable part. Have a look. Go back to Monday's bar, and the high of that bar, it's a little upside down bar there. The high of that bar is 1392.6. Where's the blue line? 1392, correct 6. How's that? Zero variance. Market gapped up a little bit, hit the blue line, turned around as if it was shot, and dived down. What about the next day? We're up to Tuesday. The high of Tuesday's bar, 1415, correct 4. Where's the blue line? 1416, correct 4. 1.4 ticks variance. That's all. How about today? Here we are. What was the close today? 1428, correct 0. Where's our line? 1427, correct 4. The market has closed above the black line. Not much, but it doesn't have to be much. And what that implies is that you now have a very high probability that the swing will be taken out. And the swing goes back to the high of May the 8th, which was 1446, correct 6. Okay. Look at the low there. This was target recognition. We started this big run up here. That low was 1270, correct 6. Where was the blue line? 1269, correct 0. 7 ticks variance. Look what you've got from it. Good bit of money. This has been a nice run up. And it's been almost straight up. There was an outside bar in there. If you were trading with a 1 bar stop, you had to get short and long again. But it's sitting at about $6,200 that trade right now. Okay, here we are. What's next? This is what I wanted to show you guys. This is silver. And this is pretty dramatic stuff. Remember, silver and gold are so highly correlated that a trade in any one of them can be executed in the other if the trade is elected. Have a look at this market here. This is a very interesting and quite strange pattern. It's certainly telling us something. We had a little gap up for the open today. It opened up at 24.22. What I'm interested in is what happened at the low and then what happened since then. The low came in today at 2349.5. Where's the red line? 2349.0. This market moves in 0.5. In other words, that's 1 tick variance. And look what has happened. It seriously stopped like it was shot and was roaring up. This is a big high volatility bar, and it hasn't made a key reversal, but it's done everything else except. Quite extraordinary, isn't it? And of course, that's perfect Danielcode target recognition at the low today. So it's certainly looking, metals are looking like they're trying to go higher, and perhaps they will. T-bonds, this is a messy chart, isn't it? There's a fight going on in T-bonds. There's a fight between what the Fed is trying to engineer, which would be these bars going down, which means interest rates up, and what the traders want to see, which is these bars going up, which means interest rates going down. And that's been the conflict this week. You've got two outside bars, one after the other there, followed by preceded by an inside bar and followed by an inside bar. So you've had virtually 4 days where there's just no clearly actionable discovery of price. It's just been hitting the Danielcode numbers, spinning back. The last little exhibition there, which we're looking at here, if you go back to the outside bar 2 bars ago, this thing was trying so hard to talk to us. The low was 126 correct 4. Where's the black line? 126 correct 4, 0 variance. But as well as that, that wasn't enough for it. It went back and closed at 126 correct 15. Where's the little red line? It's a bit behind bars there. I can tell you it's 126 correct 16, 1 tick variance. So at the close and at the low, this thing is hitting these Danielcode numbers to say to you, I know these numbers and I'm tracking them. If you don't know these numbers, you're giving up a huge, huge advantage. In fact, as I say, if you're trying to trade without these Danielcode numbers, you are heroic, absolutely heroic. Anyway, you can become a Danielcode member. Go to the website, get yourself a 14-day free trial. If you like what you see, you can subscribe to any one of our programs. And this is a 3-day chart, which I haven't shown you before. Normally we don't go down past 6 days, but this 3-day has been just so clear. It's been kind of scary. And we've got a 70 cycle about to expire any day now on the 3-day. I don't know if I've got that on this computer. I haven't, but it's not far away. We've got expiration of a major time cycle in there, and then you can see there's 3 others coming with a bit of space between this one and the next one. So all to play for, folks. And it's there. If you do a tutorial, you will know how to create these cycle sheets yourself. You'll be able to create your own time cycles, which are all come straight from Daniel's code, and which we use as price as well. All these red lines and black lines you see here, and all the blue lines you see on other charts, they are ratios of time. That's what we get from Daniel's code. It's purely about time. But we then simply put them on horizontally as well, and they become price. And we do that because time and price are the same thing on different axes. Very few people understand that, even few believe it. Danielcode proves it every single day, and you should be aware of that as well. So, as I said, don't take my word for this. If you're of a skeptical bent, go to the chart website, and you'll see that link that says Chart Archives. It's one of the gold links down along the bottom. It's Chart Archives. Click on that. You'll find every member's chart that I've created since late 2007. So you can prove all this stuff for yourself. And remember, folks, the business of trading futures and Forex is not to be right. The business of trading is making money. And we measure ourselves by how much money we're making. Free trials, if you haven't already, you're most welcome. Go to the Danielcode website, www.thedanielcode.com. Sign up for a free trial. If you have any problems, if you already had a free trial, the website will remember you and won't want to give you another one. Contact Terry at support@thedanielcode.com, and he'll get it sorted out for you. And finally, folks, here's our disclaimer. I do urge you to read it and to be aware that it's really easy to lose money trading if you don't know what you're doing, which covers most people. It's also really easy to make a lot of money once you do know what you're doing, So get yourself educated, learn to trade properly, better still learn to trade Danielcode, and your future will be bright, profitable, and rosy. Okay, so that's about me for today, guys. I've just got a couple of questions here from members. Used to be a lot of chatter on risk on and risk off currencies, which was a harbinger of equity move. How does this fare now? I don't think people have got any clue at all, actually, but if you follow the Danielcode ratios, you will know more about it than anyone else. Here's gig, you know how these blue lines are done. But to the newbie, they can say, well, there are so many, you have to be right sometime. What do you say to those people? Well, the people do say that, and it's sheer ignorance. It is not easy, as I pointed out, it is not easy for markets to close on these blue lines, or indeed our red or black lines, because there is no one else helping them with the numbers. If you get a market closing at an old high or an old low, fine. 80% of the trading population know that level can be support and resistance. Not so with the Danielcode numbers, because we're a very small business. Very few people know these numbers. And the market has to do that. It has to get target recognition all on its own. And today we've gone through pretty much every Forex chart that we cover with members charts, every futures chart that we cover with members charts, and you probably got sick of me saying it, but I am sure that we have proven to you that markets turn at the Danielcode ratios. And if you go and have a look under our chart archives tab, as I said, over 40,000 charts there that I've created over the years for our members, you will be hard-pressed to find a market that has turned anywhere except after target recognition of the Danielcode numbers. And remember, that target recognition is very tight. It's 0.1% or less. Gold's a good example. You know, when we started back in 2008-9, gold's a lot more expensive now. So the variance has got to be double. But in reality, the market still trades as it did back in 2007, 2008, with that degree of specificity and exactitude. There we are. So that's us for the moment. Enjoy your weekend coming up, folks. Remember, Monday's a market holiday for Juneteenth. We will create charts as normal, and the next lot of trading signals will be prepared Tuesday night for Wednesday's trading, as we always require a full day of trading to reset the charts after a market holiday. So thanks for being with me today. I hope I'll see you at our next webinar, which is in 2 weeks' time. All the best. Bye-bye for now.